with these deliveries continuing to happen over and over and over again, they're very close to running out of silver. I think
You're watching Silver News Daily. Subscribe for more. Imagine waking up to a world where silver prices have skyrocketed to $750 per ounce. Sounds impossible, right? But today we're diving into why experts like Andy Schectman believe this incredible surge is not only possible but imminent. From economic instability to strategic moves by central banks, we're uncovering the hidden forces that could drive silver to unprecedented heights. Stay tuned, because you don't want to miss the reasons why now might be the perfect time to consider silver as your next big investment. And if you're new here, don't forget to subscribe for more game-changing insights.
and I never have mentioned their names out of respect because it's not my place to do that. But I will tell you, there are two common threads in every single statement that I have looked at from all these different companies. Two things. One, gold coins. Don't know why they choose quarter ounce gold coins, but every single one of them do. Quarter ounce gold coins, most of which I've never heard of. Now, I've heard of the mint that makes them, but these goofy quarter ounce coins that supposedly have this great upside market potential, it's just a bunch of malarkey. And the other thing is either 1 ounce, 1.5 ounce, or 2 ounce silver coins that trade at roughly double to triple the market price of silver. Those are the two common threads that I see in every single case. And some of them, honestly, are enough to make you physically ill. I mean, you start to just get sick in your stomach when you hear people, I've been a postman my whole life, and I put my whole savings into this, and, I'm 80 years old. What am I going to do? And, it's really awful. And that's right. You should sound the alarm. We should talk about this more often because it's once we start talking about it, I was blown away by how many people have got wrapped up in this. And the common denominator, aside from what the product is that these companies are very well funded and have the ability to have very impressive ad campaigns and very impressive spokespeople whom I wonder if they have any idea. I would bet most of them have no idea the way these people do business, because these spokesmen, they're not buying like a customer would. They're getting paid a handsome salary and think they're doing the right thing, but they're not.
As we navigate through one of the most turbulent economic periods in recent history, the instability we are experiencing is unprecedented. Global markets are being shaken by inflation, geopolitical tensions, and a general sense of uncertainty that is causing traditional investments to falter. This environment of economic instability is a crucial backdrop for understanding why precious metals, particularly silver, are poised for significant growth. Historically, during times of economic turmoil, investors flock to tangible assets that can hold value even when currencies and stocks are volatile. The stage is set, and the pieces are in motion for silver to become a safe haven once again. The uncertainty in the economy is pushing investors to seek refuge in assets that have intrinsic value, and silver, with its dual role as both a precious metal and an industrial commodity, is perfectly positioned to benefit from this shift.
Not Jeffrey Christian, Jeffrey Curry said, he said that the public can't squeeze the silver market because the public buys the ETFs, and the ETFs are the shorts. Talk about a faux pas, because when an ETF shorts metal, that's illegal. ETF is not supposed to hedge anything. They are a custodian for people making speculations in the metals market. There would be no need to hedge. Talk about a faux pas. But in any case, when we see the vaults in Shanghai draining to their lowest level and really falling almost to the day that these bullion bankers showed up at the Shanghai Metals Exchange in March, and straight down since then because of the 300 million ounces, if we believe those numbers, at the LBMA, and roughly 60 million ounces in registered at the COMEX, with these deliveries continuing to happen over and over and over again, they're very close to running out of silver. I think they've lost control. They went to China and asked. And look, the normal settlement at the COMEX and the LBMA, which is they're called spot contracts, which are basically promises to deliver, are being replaced now with the scramble for physical delivery. And this is a bad thing. This is a very scary thing if you are a bullion bank who is short. And these bullion banks have rehypothecated silver, I don't know, 100 times if you or more on the LBMA. They were supposed to believe it's only 16 or 17 times on COMEX. I have a hard time believing that, but whatever. Rehypothecated is rehypothecated, is sold over and over and over and over again, where they didn't think that people would stand for delivery. And when these exchanges were founded, they didn't. But India, the Reserve Bank of India, just purchased 24 tons of gold in the first 4 months of 2024. That's 1.5 times what they bought all of 2023. And they bought more silver in the first quarter of 2024 than all of 2023, which was a record year of, I don't know, over 400 million ounces. So do the math. I mean, we're running out. And the BRICS, they are draining the Western vaults in the United States and in London. And I think that the West has lost control of the markets. I mean, it was down again today. All the technical guys are saying it was going to fall. And then what is it up now? Gold's up 1550. They can't hold it down any longer. And I think the banks are trapped. And I think these banks have a big problem. I do. And, you know, it's one of these deals where it's just like Bernie Madoff. He had a good thing going until people said they needed their money back and tried to redeem their money. To actually think there could be a force majeure or a short squeeze was something I had a real hard time coming to grips with until recently. And it just seems as though the BRICS, the Chinese, Russians, Saudis, these countries realize that that's how you win the war. It's not by firing missiles, but it's by beating us at a game just like this. And when you realize the biggest banks in the world, especially in the West, are the ones behind the suppression of silver and gold, these countries before didn't have the ability, the sophistication, the wealth, or even the interest of doing this until now. And they do. And this is something that people need to.
One of the most significant factors contributing to the potential surge in silver prices is the strategic shift by central banks towards tangible assets. Over the past few years, we've seen central banks around the world quietly increasing their reserves of precious metals. This move is a clear signal that they are preparing for economic turbulence by securing assets that are not dependent on the stability of fiat currencies. Central banks have historically relied on gold, but silver is becoming an increasingly attractive option due to its lower cost and high liquidity. This strategic accumulation is a strong indicator that silver is being recognized not just as a commodity, but as a critical financial asset. As these powerful institutions continue to stockpile silver, the supply available to the public decreases, driving up demand and, consequently, the price. This shift is not just a defensive maneuver, it is a proactive strategy to hedge against inflation and economic downturns, reinforcing the bullish outlook on silver.
And it's an honor. I guarantee you the 85,000 Yoda customers who have $115 million in savings locked up understand what that is. And just as an aside, I know you didn't ask me this question, but you know, I found it interesting. It's called a Fintech company. This middleman, Synapse, who's filing for bankruptcy. And what is a Fintech company? A Fintech company is something like Zelle or Venmo or even Robinhood. It's a middleman, so to speak. And the whole thing, it says the disruption caused by a dispute between fintech middleman Synapse and Tennessee-based Evolve Bank and Trust. Synapse serves as a middleman between customer-facing fintech brands and FDIC-backed banks, but has had disagreements with several of its partners about how much in customer balances it is owed. Their CEO said, "We never imagined a scenario like this could play out and that no regulator would step in and help." You know, to think that we're out of the woods yet is so far a stretch, it's not even funny. And with the expansion of fintech companies in crypto, in payment processing, in all of these middlemen in a growingly, or I don't even think that's a word, in a growing and increasingly digital world, you're going to see a lot more of this. And it's disconcerting when you see a disagreement about how much each customer's balances are owed. It becomes a little concerning. And I think a lot of us have taken for granted the convenience that comes with these apps and these online portfolios, these fintech companies, which are not, some of them are, well, in this case, they're not FDIC backed. It's concerning. So yeah, a lot of people don't get it until it's too late. And that's why, I love the title Reluctant Prepper, because no one wants to prepare. No one wants to buy life insurance. It's reluctant when you do it. I just had to do it the other day and had to take the physical and all that. I was reluctant to do it. I didn't want to do it. But that's the whole premise of what we're doing here, is to wake up and to be prepared. And it's harder for me than it is for you, because you are someone who has all these wonderful guests on. And I'm someone who owns a precious metals company. So they think a lot of people are skeptical of me trying to sound the alarm. And I wish it weren't that way. I understand it intuitively. I get it. But, like I've said before, there should be the ability to run a good business and do the right thing. And that's what I try to do. And that's why I'm so honored to be here with you and to work with you, because I don't know that I've met anyone more honorable than you in 34 years of business. So hopefully that resonates with some of your listeners, because I do want to do the right thing. I do want to help people, because what's coming is scary, and it's getting scarier by the day as far as I'm concerned. Just go back and listen to what Lenin said. I don't know how many years ago that was, but he said the middle class should be ground between the millstones of taxes and inflation. Seems to me that's what's happening right now. So hopefully we can wake up some of the people before the whole middle class just disappears, and we can push back and do the best we can to not just survive, but maybe even thrive in the coming weeks and months ahead.
Another key driver behind the potential rise of silver to $750 per ounce is the increasing demand for silver in industrial applications. Unlike gold, which is predominantly used for investment in jewelry, silver has a significant role in various industrial processes. Its unique properties, such as high electrical and thermal conductivity, make it indispensable in the manufacturing of electronics, solar panels, and medical devices. In the electronics industry, silver is used extensively in the production of conductors, switches, and contacts because of its superior conductivity. As our world becomes more digital and interconnected, the demand for electronic devices continues to soar, thereby increasing the need for silver. Similarly, the renewable energy sector heavily relies on silver, particularly in the production of photovoltaic cells for solar panels. With the global push towards green energy and sustainable practices, the demand for solar panels is set to rise exponentially, driving up the need for silver. Furthermore, silver's antibacterial properties make it a crucial component in the medical field. It is used in various applications such as wound dressings, surgical instruments, and even in coatings for medical devices to prevent infections. The ongoing advancements in medical technology and the heightened focus on healthcare due to global health crises are likely to sustain and even increase the demand for silver in this sector. What makes silver's industrial demand particularly impactful on its price is the fact that once silver is used in these applications, it is often not recoverable. Unlike gold, which is frequently recycled, silver used in industrial processes is lost to landfills and other waste streams. This continuous consumption without significant recycling creates a scenario where the available supply of silver is constantly shrinking. Additionally, global supply chain disruptions and mining challenges are adding to the scarcity of silver. Mining silver is becoming increasingly difficult and expensive, with declining ore grades and environmental regulations making extraction less viable. These factors, combined with the rising industrial demand, create a perfect storm for a significant increase in silver prices. As industrial uses for silver expand and technological advancements continue to integrate this precious metal into essential products, the pressure on silver's availability will likely intensify. Investors and central banks are acutely aware of this dynamic, further fueling the speculative and actual demand for silver. This dual role of silver, as both an industrial commodity and a monetary asset, uniquely positions it for a potential price surge as these various forces converge.
Possession of alcohol, drug possessions with the intent to distribute, a standalone resisting arrest charge, i.e. cases where a person is charged with resisting arrest, and that is the only charge. And lastly, a resisting arrest charge combined with only charges that all fall under the list of charges to decline to prosecute. Resisting arrest charge combined with only a trespassing charge. She wants to make all of these things non-prosecutable. And you have to ask yourself, where the hell are we? And so when we talk about buying gold and silver, it's not just to protect for economics. It's because all of these things are connected. All of these things will have a detriment on how the world looks at the United States, how the world wants to continue to own our treasury debt, which can be sanctioned and or confiscated. how the world wants to hold our dollars, which can be inflated away and created ad nauseum because of because of this country. We don't have to talk about the judicial system now, do we? Or the electoral system, or the border problems, all of these things that I keep talking about. I really want people to understand that they're all connected. All of this is connected. One without the other isn't as strong. You put all this stuff together and the world looks at us like they've lost their mind. This is why the poo-pooers of the BRICS, I disagree with them to my core, to my soul, because we are not the country that we once were. At least that's the way the world looks at us. So why do you buy gold and silver? It's not just to protect for all the lunacy of the monetary and fiscal irresponsibility of our government and the Federal Reserve, but it's more along the lines of we are on the Rubicon, really, just about to cross over what I believe is a material change in the way things go in this country. And if you don't see that, maybe you need to take a step back and look at a broader picture, because it's starting to really get to me and I'm getting itchy over it all. Like, I can't believe more, like Trump being indicted on all 34 charges. You got to be kidding me. So anyways, to your point,
inflation and currency devaluation are two critical factors that significantly impact the price of precious metals, particularly silver. As inflation rises, the purchasing power of money decreases, leading investors to seek assets that can preserve their wealth. Silver, with its intrinsic value and historical role as a store of wealth, becomes an attractive option in such times. The global economy is currently experiencing heightened inflationary pressures due to a combination of supply chain disruptions, increased consumer demand post-pandemic, and expansive monetary policies. Central banks have been printing money at an unprecedented rate to support their economies, leading to an oversupply of currency in circulation. This excess liquidity in the market is driving up prices for goods and services, diminishing the value of fiat currencies. Historically, precious metals like silver have performed well during periods of high inflation. They serve as a hedge against the eroding value of paper money. When inflation rises, the real returns on savings and fixed income investments decline, prompting investors to turn to silver and other tangible assets that are expected to retain or increase in value over time. Silver's dual role as both a monetary metal and an industrial commodity makes it particularly effective as an inflation hedge. Moreover, the devaluation of currencies adds another layer of support for higher silver prices. As central banks continue to print money, the value of their respective currencies weakens against more stable assets like precious metals. This phenomenon is evident in the declining value of major currencies such as the US dollar, euro, and yen. As these currencies lose their purchasing power, silver, which cannot be created out of thin air, becomes a more attractive and reliable store of value. The ongoing geopolitical tensions and economic uncertainties further exacerbate this trend. Investors are increasingly wary of the stability of fiat currencies and are seeking refuge in assets that are not subject to the same risks. Silver, with its limited supply and growing demand, presents a compelling case as a safe haven asset. The current environment of currency devaluation is reminiscent of past economic crises where silver prices soared as investors sought to protect their wealth from eroding fiat currencies. Additionally, the potential for future monetary policy shifts adds to the bullish outlook for silver. Should central banks decide to tighten monetary policy to combat inflation, it could lead to higher interest rates, further destabilizing the value of fiat currencies. Conversely, if they continue with expansionary policies, the resulting currency devaluation will continue to drive investors towards silver. Either scenario creates favorable conditions for a significant increase in silver prices. In summary, the combined effects of rising inflation and currency devaluation are powerful drivers that can push silver prices to new heights. As the purchasing power of money declines and economic uncertainties persist, silver stands out as a reliable hedge against inflation and a safeguard for preserving wealth. These dynamics underscore the growing importance of silver in the current economic landscape and its potential to reach unprecedented price levels.
It's like kind of like a NASA, if you will. And it reads, this committee plays a crucial role in enabling member space agencies to work closer together regarding environmental protection, disaster prevention, and mitigation and tackling climate change with efficient that's what it is. Yeah, it's also military. Let's just call it what it is. But I think what I'm really getting at is that we're past the point of the U.S. being able to point fingers. And if anyone should have fingers pointed at them, it's the U.S. institutions. It's the government of the United States. And I hate to say it, but it's true. And, you know, China doesn't have 750 military bases around the world. And if you listen to that Glenn Beck interview, it will truly blow your mind. Because the one thing that we see in all of these uprisings, starting with like with the Arab Spring, are these NGOs, non-government organizations that are paid, financed, a lot of them by Congress. And you find them in all of these uprisings, including in Hungary and in the Arab Rising. They're now doing it in Palestine. And you know, this is something, or in Gaza, excuse me. And now there's proof that they're funding some of these college uprisings and had been planning it since November. So when you talk about conspiracies, when you talk about meddling, when you talk about meddling in others' affairs, I think that's the pot calling the kettle black. And while China is not perfect, I do believe that they are far more cooperative than we are. And when you can threaten people with sanctions and now confiscation of assets, you know, it's really not cooperation as much as it is being cooperative with a gun to your head. So I guess that's just my 2 cents. And again, I'll say it again, I love this country, and I just think it's time for a change in the way that...
Another critical factor to consider in the potential rise of silver prices is the trend among institutional investors towards physical precious metals. Institutional investors, including hedge funds, pension funds, and insurance companies, have started to allocate a more significant portion of their portfolios to tangible assets like silver. This shift is driven by several key reasons, all of which point to a bullish outlook for silver. Firstly, institutional investors are recognizing the limitations and vulnerabilities of traditional financial instruments in the current economic climate. Stocks and bonds, which have historically been the backbone of institutional portfolios, are facing unprecedented volatility and uncertain returns. The global financial markets are rife with risks ranging from geopolitical tensions to economic policy shifts, making the predictability of returns increasingly difficult. As a result, institutions are diversifying their portfolios to include assets that are less correlated with traditional markets, and silver fits this criterion perfectly. Secondly, the trend towards sustainable and socially responsible investing, SRI, is gaining momentum among institutional investors. Silver, being a critical component in green technologies such as solar panels, aligns well with the objectives of SRI. As the world moves towards renewable energy and sustainable practices, the demand for silver in these applications is set to increase. Institutional investors are capitalizing on this trend by investing in silver, both as a commodity and through equities in companies involved in its mining and production. This not only supports the price of silver, but also enhances its appeal as an investment vehicle that aligns with global sustainability goals. Moreover, the liquidity and versatility of silver make it an attractive option for large-scale investors. Unlike some other commodities, silver can be traded in large quantities without significantly impacting the market price. This liquidity ensures that institutional investors can enter and exit positions with relative ease, making it a practical choice for portfolio diversification. Additionally, the versatility of silver, with its applications in various industries, provides a buffer against sector-specific downturns, further solidifying its role as a reliable investment. The actions of prominent institutional investors can also influence market sentiment and drive up demand for silver. When large funds and financial institutions increase their holdings in silver, it sends a strong signal to the market about the perceived value and potential of this asset. This can create a positive feedback loop, where rising silver prices attract more investors, further driving up demand and price. Furthermore, the increasing sophistication and availability of investment vehicles for silver have made it easier for institutions to invest. Exchange-traded funds, ETFs, and mutual funds that focus on silver provide a convenient and cost-effective way for institutional investors to gain exposure to the metal. These financial products offer liquidity, transparency, and the ability to track silver prices closely, making them attractive options for large-scale investments. In conclusion, the trend among institutional investors towards physical precious metals, particularly silver, is a powerful driver of potential price increases. The diversification benefits, alignment with sustainability goals, liquidity, and influence of institutional investments all point to a robust demand for silver in the near future. As more institutional investors recognize the strategic advantages of including silver in their portfolios, The market is likely to see significant upward pressure on silver prices, bringing the forecast of $750 per ounce closer to reality.
To watch this. You see that? You see that, Glenn Beck? Color Revolution? Color Revolution, the underground anti-Trump cabal. I watched it last night. It'll blow your darn mind. It'll blow your mind about who intervenes in other countries' affairs. It's not China. We have a long history of doing that. And I don't know why I always feel like I need to say this, but I am a patriot, and I thank God every day for living in this country and the opportunities it afforded me. But to go around and point fingers at a country like China when the United States has 750 U.S. military bases in 80 countries. And when we talk about, meddling in other countries' affairs, we should have listened to Thomas Jefferson and not done that. We should have a secure border, bring all of our troops home, and help. And instead of meddling in others' affairs, if you want to put them to work, have them help build our infrastructure, which is crumbling and decaying. And all the money that costs, that supply chain, the supply chain of keeping all of these 750 military bases in 80 countries supplied, it's extraordinarily expensive. And so, this is a very anti-Chinese slant. And as far as I'm concerned, if I had my druthers, I would rather partner up with a country that wants to be cooperative. Now, it doesn't always work out. Some of these countries are third world, and they don't know how to manage their affairs or manage their funds or manage their promises, perhaps the way that they originally signed up for. Maybe it's kind of like all of these people being given, checks to pay off their student loans, including the mayor of St. Paul, who makes $140,000 a year, just got the rest of his college tuition paid off. But you make a deal, honor it, and if you fall short of it, well, that's not China's fault. And when you talk about these spy satellites or whatever that they're going to do look, in 2022. All of these BRICS nations created a joint committee on space cooperation.
It's essential to understand how silver has performed during past economic crises. Historical context provides valuable insights into the behavior of silver prices under similar conditions of economic instability, inflation, and market uncertainty. Looking back at the 1970s, we see a period marked by high inflation and economic uncertainty, similar to what we are experiencing today. During this time, silver prices soared from around $1.80 per ounce at the start of the decade to a peak of approximately $50 per ounce in 1980. This dramatic increase was driven by investors seeking to protect their wealth from the eroding effects of inflation and the declining value of fiat currencies. The Hunt brothers' attempt to corner the silver market also played a role in this spike, demonstrating how market manipulation can significantly influence prices. Fast forward to the 2008 financial crisis. Silver once again showed its value as a safe haven asset. As the global financial system teetered on the brink of collapse, silver prices surged from about $11 per ounce in late 2008 to nearly $50 per ounce by 2011. This period was characterized by significant monetary intervention from central banks, including massive quantitative easing programs that injected liquidity into the economy. Investors flocked to silver and other precious metals as a hedge against the potential fallout from these unprecedented monetary policies. These historical examples highlight a recurring theme. During periods of economic distress and high inflation, silver prices tend to rise significantly. The reasons are multifaceted, including increased demand for safe haven assets, declining trust in fiat currencies, and strategic shifts by investors towards tangible assets. In the current economic climate, we are witnessing similar conditions that could lead to another significant rise in silver prices. Inflation is on the rise, driven by expansive monetary policies and supply chain disruptions. Economic uncertainty is rampant, with geopolitical tensions and the lingering effects of the COVID-19 pandemic creating a volatile environment. Just as in the past, investors are looking for reliable stores of value, and silver is emerging as a prime candidate. Furthermore, the current market conditions are amplified by the technological and industrial advancements that were not as prevalent in previous decades. The demand for silver in electronics, renewable energy, and medical applications adds a new layer of demand that did not exist during the 1970s or even the early 2000s. This modern industrial demand, combined with the historical investment demand, creates a powerful case for a substantial increase in silver prices. By understanding these historical contexts and drawing parallels to today's economic environment, we can see that the potential for silver to reach $750 per ounce is not as far-fetched as it might initially seem. The same forces that drove silver to new heights in the past are once again aligning, but this time, the industrial demand provides an additional catalyst for price growth. In conclusion, history has shown that silver performs exceptionally well during times of economic crisis and inflation. With today's conditions mirroring those of past crises, combined with unprecedented industrial demand, the stage is set for a significant surge in silver prices. This historical perspective underscores the potential for silver to reach new heights, making it a compelling investment opportunity in the current economic landscape.
I think keep a very close eye on for sure, because I have a feeling that it's only going to accelerate as we get closer to the election.
Well, for people who want to take shelter and to properly shelter themselves with real assets that don't have counterparty risk in the face of all of that chicanery that we're being inundated with, what can we offer them in terms of weekly specials that can do that at a bargain?
Yeah, and before I answer that, I just want to mention one other thing. Talk about chicanery and more proof that this country's lost its mind. The Daily Mail just came out with an article on Michelle Wu. She is the first female and Asian American mayor in the city of Boston, and she has just gone on to. She has promised to reallocate police funds to other city priorities and believes in demilitarizing law enforcement by limiting the use of tear gas, rubber bullets, and police dogs. Further, Wu wants police records of use of force to be made public, which critics say could endanger officer safety. She also wants to include certain categories of breaking and entering, wanton and malicious property destruction, larceny under 250, and trespassing as non-prosecutable crimes. You got to wonder, I mean, what the hell? Where are we? It's like you should put bananas on our flag instead of stars. And I just wonder sometimes if people really understand the gravity of these things that are all bearing down on us at the same time. Sometimes we focus too much on, gold and silver and economics, but the reality is that so much in this country is upside down right now. It's just crazy. I just want to read just a couple of things. These are the things that charges for which the default to decline prosecuting unless supervisor permission is obtained: trespassing, shoplifting, larceny under 250, disorderly conduct, disturbing the peace, receiving stolen property, minor driving offenses, including operating with a suspended or revoked license, breaking and entering, which is into a vacant property or where it is for the purpose of sleeping or seeking refuge from the cold and there is no actual damage to the property, wanton or malicious destruction of property, threats excluding domestic violence, minor in possession.
While the potential for silver to reach $750 per ounce is backed by strong economic and historical evidence, it is important to consider the potential market risks and speculative nature of such a prediction. Investing in precious metals, like any investment, comes with its own set of risks and uncertainties. Understanding these risks is crucial for making informed investment decisions and managing expectations. One of the primary risks is market volatility. Precious metals markets are known for their price swings, driven by various factors such as changes in investor sentiment, geopolitical events, and macroeconomic data. Silver, in particular, can experience significant price fluctuations due to its smaller market size compared to gold. This volatility can be both an opportunity and a risk, depending on how well investors can navigate the market movements. Additionally, regulatory changes can impact the precious metals market. Governments and regulatory bodies can introduce policies that affect the supply, demand, and trading of silver. For instance, changes in mining regulations, environmental policies, or trade tariffs can influence silver production costs and availability. Investors must stay informed about potential regulatory changes that could affect their investments. Another risk to consider is the possibility of technological advancements that could alter the demand for silver. While the current trend shows increasing industrial use of silver, particularly in electronics and renewable energy, future technological innovations could either increase efficiency or find alternative materials, potentially reducing the demand for silver. For example, advancements in battery technology or the discovery of cheaper, more abundant materials could impact silver's role in various applications. Market manipulation is also a concern in the precious metals market. Historical events, such as the Hunt brothers' attempt to corner the silver market in the 1980s, highlight how market manipulation can cause extreme price volatility. While regulatory oversight has improved, the risk of market manipulation still exists, and investors should be aware of the potential for such activities to influence prices. Moreover, speculative behavior can drive prices to unsustainable levels. The excitement and optimism surrounding potential price surges can lead to speculative bubbles, where prices rise rapidly based on investor speculation rather than fundamental value. These bubbles can burst, leading to sharp corrections and significant losses for investors who bought in at the peak. It is important to distinguish between speculative hype and genuine market fundamentals when making investment decisions. Despite these risks, the underlying factors supporting the potential rise of silver to $750 per ounce remain compelling. Economic instability, inflation, currency devaluation, and increasing industrial demand create a strong foundation for silver's price growth. However, investors should approach this opportunity with caution, conducting thorough research and considering their risk tolerance. As we continue to explore the dynamics of the silver market, it is essential to keep the conversation going. What are your thoughts on the potential for silver to reach $750 per ounce? Do you believe the risks outweigh the potential rewards, or are you optimistic about silver's future? Share your views in the comments below, and let's engage in a meaningful discussion about this exciting investment opportunity. In summary, while the potential for silver to reach $750 per ounce is supported by strong economic and historical factors, investors must be mindful of the associated risks. Market volatility, regulatory changes, technological advancements, market manipulation, and speculative behavior all play a role in the precious metals market. By staying informed and engaging in thoughtful discussions, we can navigate these complexities and make well-informed investment decisions.
You're going to call the Department of Commerce, the Better Business Bureau, the Attorney General, and be very stern about it. You have a fighting chance. And it's really gross that when you see gold approaching its all-time highs, backed off a little bit from its all-time highs, and these people are still down, $300-400 per ounce or $100 each on a quarter-ounce coin. It's just absolutely pathetic. It's wrong, and I don't know how these people sleep at night because they all prey on IRAs. So you're dealing with older folks who have spent their life building their IRA, and it's not like they can go back to work at 75 years old. It's truly criminal, in my opinion. But that's the pitfalls of a federally non-regulated industry. This is one of the things that we hang our hats on. This is why I left my corporation in Minneapolis when I moved to Florida, because of it. It's the only state that has any semblance of regulation in a completely Wild West non-regulated industry. Don't mean to belabor the point, but it's important to talk about it periodically. There are too many people that have been harmed.
In conclusion, the confluence of several powerful factors suggests that silver has the potential to reach the unprecedented price of $750 per ounce. We've examined the current economic instability, characterized by rising inflation and currency devaluation, which is driving investors to seek refuge in tangible assets. Central bank strategic moves towards accumulating physical precious metals, along with increasing industrial demand for silver, further bolster the case for a significant price surge. We've seen how historical precedents, such as the economic crisis of the 1970s and the 2008 financial meltdown, have led to substantial increases in silver prices. These historical trends provide a roadmap for understanding how similar conditions today could lead to a dramatic rise in silver's value. Moreover, the shift among institutional investors towards physical silver as a hedge against economic uncertainties and inflation highlights the growing confidence in silver as a reliable store of value. However, it is crucial to recognize the inherent risks and speculative nature of such a prediction. Market volatility, regulatory changes, technological advancements, and the potential for market manipulation are all factors that could influence silver prices. Investors must approach this opportunity with a balanced perspective, considering both the potential rewards and the associated risks. Ultimately, the current economic landscape presents a unique opportunity for silver to achieve unprecedented heights. As the global economy grapples with inflation, currency devaluation, and geopolitical tensions, silver stands out as a versatile and valuable asset. Its dual role as an industrial commodity and a monetary metal positions it uniquely for substantial gains. For those considering an investment in silver, now might be the perfect time to take action. The strategic accumulation by central banks, the increasing industrial demand, and the historical performance of silver during economic crises all point towards a bullish future. However, always remember to conduct thorough research, assess your risk tolerance, and consider seeking advice from financial professionals before making any investment decisions. If you found this analysis insightful, don't forget to subscribe to our channel for more in-depth market insights and investment strategies. By staying informed and engaged, you can make well-informed decisions that help protect and grow your wealth in these uncertain times. And as always, please note that this is not financial or investment advice. It's crucial to consider your individual financial situation and goals when making investment choices. Thank you for joining us in this deep dive into the potential for silver to reach $750 per ounce. Share your thoughts and predictions in the comments below. We'd love to hear your perspective on this exciting topic.
Go about how you're seeing these exchange for physical deliveries that are these large deliveries of kilo gold bars in particular that are being purchased in the West, delivered to Brinks, Hong Kong, which is a COMEX facility, and then being trucked over to the Shanghai Gold Exchange. We've talked a lot about how the vaults are being drained and the bankers showing up at the Shanghai Metals Exchange, and now those vaults are being drained, in particular in silver, because you can't export gold, and these things are undeniable. But I just want people to understand kind of simplistically what's happening. So the Chinese vaults are being drained due to the large demand exceeding supply in West. And I think these bullion banks are trapped. I know Alistair McLeod kind of alluded to that in your interview with him that I watched last night, that these banks are trapped. And so the Shanghai Gold Exchange and the Shanghai Futures Exchange sees the physical price of silver go higher, and at as much as $3 and $4 higher than the West. And because of this arbitrage that's sucking all the metal over there, right? And these traders don't have loyalty to this country in terms of the long-term ramifications. They're making a ton of money. So as this demand keeps flowing there and the price goes higher, you got the brain dead bullion banks and the COMEX and the LBMA that continue to slam down the price harder. And the spread between silver in the West and silver in China is at least 10 to 15% as a result of all of this, or higher. And so these Western vaults are being drained as the traders are monetizing the arbitrage. And so when you see silver in the vaults drop to their lowest since 2020 in Shanghai, that is a very ominous sign, because once those vaults are drained, we already know there's only roughly 300 million ounces of silver on the LBMA, if we believe what they're saying. So when we talk about the Shanghai vaults and their inventory in silver dropping to the lowest level since 2020, and a 10 to 15% arbitrage, if you will, for all the importers, you could very much argue that we are seeing, in the spirit of that, what's his name, Mad Kitty or whatever it is on what's his name, the guy that tried to squeeze AMC and GameStop. A great movie, by the way, Dumb Money. What's his name, the Mad Kitty or whatever it is. The whole idea of squeezing the silver market, and as Jeffrey, what's Jeffrey's last name? The trader from Goldman Sachs.